This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com, and it is Thursday. It is Fed Day. If you haven't heard, or maybe you've heard 150,000 times in the past week, it is important, and we'll get into that. As far as overseas, though, not really much to go on. I guess the world is waiting to see how we will react. You had Shanghai index, I think, off 2%. It was up 5 yesterday. The Nikkei was up like 1% or so. It was kind of mixed. I just want to quickly show you the chart, though, of the ASHR, because I do think it's somewhat important. You look here at trends, and you want to see if we have headwinds or tailwinds. But to start the year, the Shanghai Composite was a big-time tailwind for us. Okay, that was when it was above the 8-day and the 21-day trending to start the year before it broke. And now, if you look at it, really, we've been below the 21-day for the majority of this time. So at this point, I do think it's somewhat important to see how the Shanghai or the ASHR responds right here. Okay, if it can get above the 21-day moving average with some authority, maybe the Shanghai bounces a little bit higher to fill some of these gaps, and that would probably be a tailwind. If the Shanghai turns lower and this turns into another bear-type flag, that would probably be a headwind for our market. So with us being all globally connected and everyone looking at where the action everywhere, even the Fed, you just want to kind of know. As far as Europe, I'm not going to put it out there. They're flattish, and it's probably they've been acting kind of like us, in line. As far as our markets, okay, I think a lot of people this week were kind of thinking that we would have a quiet Monday, Tuesday, Wednesday, and then resolve the wedge one way or another on Thursday. But meanwhile, we had two nice calculated moves or two up days, prior. So that makes the trade a little bit interesting. If you look here at the S&P, we talked about how tight this wedge was, after breaking the channel that we were pretty much, trapped in for the majority of 2015 before this inside wedge broke to the downside. So we've been hovering lower, trying to figure out what's next. Do we retest this broken area, retest the 200-day, or do we retest the August 24th lows? And then on Tuesday, after holding this 1938 for 3 days, you had one up day, which some people might have positioned long or covered their shorts, and then you got another. So coming in today, it'll be interesting to see, what happens, because, usually with Fed Day, you get about 3 or 4 fake moves before some kind of directional move. So at this point, all you really know is that, this was cleared. So I would say if we hold above this spot, it's going to be hard for the bears to growl too loud, and that spot is about 1977. And can't rule out a retest of this, 2040 area, which, if you look at the weekly chart, would be a retest of that channel. Okay, we've been talking about how we're trapped in different, time frames, and as of now, we did get that momentum break of the upper channel right here. Okay, and now we're trying to figure out, do you retest that or not? So you have a double bottom around here. You have us breaking a little bit to the upside. So if you're just short this, thinking that we have to go lower, you got to be aware that we could retest this spot. And if you've been risked down, you probably, and you're a manager, you're probably a little bit worried that if you didn't position during this lower range and we do not revisit this, chances are you're going to be underperforming. So those are just some thoughts. Fed Day for me, I tend to hate to trade it because you have these 3, 4, manic type moves, which there is some opportunity on either end of it. Then sometimes you get that 45-minute trend move at the end of the day, which is nice. But typically, the day after the Fed is the most important to establish what the new direction will be. But what's difficult now is tomorrow's quad witching. So all the option dealers, have spots where they want to close things, where they have the biggest open interest. And then you also have today, September 17th, which is pretty much the last day that the corporate buybacks can happen because we're going to be entering a blackout period for earnings. So, and the oscillator's plus 50. So you have a lot of things going on here. So I know some people have short in the brain, but if you do, you have to be careful. The push can go higher. So whatever, we'll look for clues to see what's next. As far as some clues, you can look at the Qs. The Qs, did give some clues that we could head above this area in the range when it started poking its head out on Tuesday above the prior high. This too, has a boatload of resistance a little bit closer to 108. So, at this point, if you've been rolling up your shorts, you're probably a little worried. And if you're looking to stay long, I would be trimming into this zone. If you haven't trimmed already, we're above all these moving averages, but again, lots of resistance right here. I'm not going to go to the weekly chart, but we've already kind of penetrated through prior resistance, and now there's a bit more room. As far as the bios, this too, lots of different trades here in the bios. This trend has been broken, which we talked about, but most people, I would think, if you're an active trader, you probably covered your shorts well into this zone, considering that a lot of guys were isolating this, head and shoulders top pattern, which wound up working out very well to the downside. But now, here we are brushing back into that resistance zone. So some that covered into here are probably saying, I need to reshort this, which might make some sense, but just realize that, again, the moving averages are a little higher. So if you start shorting early, there's a chance that you could see this 363 to 365. And if you're looking to be long, there's not much leeway left here. So it's not that much of a compelling trade, more of a compelling short into this spot if it sees it. As far as the banks tend to get some flows if rates seem like they're going higher. So if they do raise today a quarter of a basis point, which I think would be the best case scenario for stocks, and then keep those dots lower, the banks could continue. If you look here at some bank names, let's just go right to them. Goldman Sachs hasn't been a leader in a while, but if it wants to lead, it's going to have to clear this spot. Okay, it started to give you a portion of a trade here when it cleared this little area. This is a pretty big resistance zone. If this can clear 191, 192, there's a trade there to retest 194. Okay, not a heck of a lot of room there, but something to do if you're a trader. JP Morgan looks a little bit tighter. JP Morgan also, hasn't been such a great acting stock lately, but you do have this symmetrical triangle here where it's already almost at the top end of the range. So if they go after the banks, perhaps this JP Morgan fills this gap here for a trade. So, at this point, if it gets above 64.29, there's a $1.50 move here, which, for a trader, that could make you a decent day. And then once that gap's filled, then, some people might start to actually reshort that. But at this point, it's tight. So you really need to look at tight patterns here because they give you points of reference. Morgan Stanley also, which has been broken. Morgan Stanley, which broke its trend and broke the 21-day all the way back here, okay, and came lower, is now giving you this same type of symmetrical triangle look where you do have a tight area. I'm actually going to look at this today because if the banks start to go, maybe there's a trade here above 35, and then the 200-day or this gap fill doesn't happen all the way up to 36. So that would be something at least that's calculated, and there's a potential catalyst because if they raise rates, then the first impulse of what most traders are going to be is to buy the banks, and that would be your spot. Bank of America is also supposed to get some, some interest if rates get raised because of all their deposits, et cetera, et cetera. And this too has a very tight spot. So if this were to clear this, 1640, there's not a heck of a lot of move, but 30 cents is a decent percentage move to the 200-day. So if these things want to retest the 200-day, at least you have tight, spots. So on Fed Day, the banks are worthy of having up, especially as it gets closer to the news. As far as some of the tech names that have been acting better, I'm going to have an eye on Apple, which is down a little bit pre-market. I'm not sure why, because the futures are flat, but we shall see. All you know is that Apple has been acting better ever since the lows here on August 24th. You now have a tight flag, and this could give you some, some clues on the action today. So it would be good if this would go green today, and then if this were to clear 1690, chances are the market in tech is acting well. If it were to close below this, 114.50 area, maybe that's telling you that market's going to retreat, because this stock gave some clues that we could see the upside of the wedge when it broke above the weekly high well before the rest of the market. It also went green that crazy day well before the market. So Apple tends to give some true stripes about what's going on in the market. And lastly, Apple also broke its big channel well before the market. So it's always good to know kind of what Apple's doing because of psychological ramifications as well as money type trades. So here's your inside flag. We'll see if it can continue to hold. Other setups, Google and Amazon, very loose and wide, but they've been acting pretty well. You look at Google, it broke that little wedge formation that we were talking about for a trade and then held yesterday. So the market wants to have some power. They might come after Google. Here you have an inside little flag, a little commitment to the break above this wedge. And your next spot will be if it could take out this 2-day range, which is around 669. Amazon, above all the moving averages. Very, very tight. I know it's not the easiest stock to trade, but when it goes, it goes. I remember all of us trying to, be long this thing, and it took so long before finally getting going, and then it had a nice move. Here, I don't know if this is enough time, but it's getting very tight within this little spot. You have your 8/21 day, it's above everything. You take a closer look here, and Amazon does seem like if something wants to break out and show the market having some power, this would be, something to look at. 530 to 533 is that spot, but it has to have volume. When we talk about breakouts, some days they happen when we want them, sometimes they don't. We talked about Tesla a lot in the last 3 days, and finally, look at this move. This move, if you were patient enough, what was happening here was above all the moving averages. You finally had a decent day in the market, and a lot of people probably got short on that Porsche news, and boom. Okay, if you tried it in these 2 days and got worn out kind of like I did, you probably didn't make as much as you should have on this day. But if you waited and saw it happen and was patient, decent move. Now it's getting a little upside follow through. This morning, not a heck of a lot yet. This is one spot, and then here's your next spot. So at least it's showing you that some of these descending channels can get broken, and this was the first time you could buy high and almost sell higher. You look at something like Under Armour, which I showed you earlier in the week too. Boom! We haven't seen a chart like that in a while. Okay, so we were saying, like, can any stocks be bought high and sell them higher or break out? Well, this gave you your move here, cleared year-to-date highs on, their news that they're going to have they might double revenues, etc. But all in all, leadership. That's what the market needs. And maybe Nike follows suit, maybe they don't. But this also, we showed this tight pattern that cleared to the upside. Starbucks also, a tight pattern that's working its way back up above the moving averages. So, I talk about stocks that if you want to have any kind of portfolio approach on during a little trending period, which we've seen the past 3 days, you want to be in the ones that are above the moving averages and have the potential to break out, and those are the ones that give you the best action. There are some lower level broken names that snap back a little bit, like the oil names. Okay, the oil sector is something that I focused on the last 2 days because Goldman came out with that crazy call. It's going back to 20. Meanwhile, most stocks and that the oil held where it had to with the XLE. So real quickly, they reiterated their call today, but at this point, looks like it's hanging in there. Here is your day one move and then into day three, and then it went sideways, flagging, and gave you kind of a move out yesterday. So now, for oil to be any good, you would think that 1480 holds for it to continue. XLE held that 6250 that we talked about. Which was right here. This gap came into it, and then yesterday gave 2 days ago gave a little relative strength. That's why I bought it, but I did sell yesterday. Question is, can it really break this long-term downtrend? Okay, it's been one for a long time. So we shall see. If the market wants to rally, it's going to need to be a little bit broader, and you have a big downtrend here. So this was your easy move, which is why I took it off. I'm not so sure that it's going to break it, but the longer it goes sideways, the more focus you could have on this, because if it starts to clear, just say, what is this, 66-ish, maybe, you get a move back into the 70 range, which would help the broader index, and then all of a sudden you probably have the S&P going back to 2040, etc. And then you have some of the broken high beta names. FIT has been a little broken, but came out with news yesterday, woke up a little bit. So at least maybe this is back in the game. If you're long, be long versus this spot. Maybe work this way back up to 40 before it gets some resistance. Hate to say it, this GPRO, which has been really broken. You know, I bought a little bit yesterday just for a trade. It's fully broken, but it did clear this spot, which was right there. A lot of these names are coming back up and retesting the 21 days, so I figured maybe it's worth a try. You know, I do remember it looked good, you know, just for it to write down in your rule book. Looked great coming into here, right? Remember that nice flag type pattern? It looked like it was going to break above, and then boom. That was the day I got out of my GPRO because it engulfed this entire range, and I haven't really bought it since. I did buy a little bit yesterday down here because I was able to get out there. 60 down to here, so it's just like a trash for treasures trade, but I'm not expecting much. MBLY, you know, gave you that red dog reversal, which we did mention. If you do trade this, okay, happened right here. Nice red dog reversal. That was after Citron bashed it. Here it is, okay, red dog reversal, entry point when it went below 43.78 back above, then it held here. So now I think your next resistance spot is there. So if you bought on this day as a swing trade, you're making decent money, you know, and you do have a little bit more room. Same thing goes with even Netflix. Netflix was a broken stock. 2 days ago, we were watching it to see if we had some kind of reversal pattern, and we got a really nice red dog reversal. You know, basically it's been broken, and it changed once it broke the 21-day, but here it gave you a small red dog reversal into support. That's why I bought it. I did sell yesterday, but gave you a nice 2-day trade, and 2-day trades is what could make your month. Okay, a little reversal here around that 94.33 pivot, and then it took out this little range, and now I guess there's some more room up to here, but it could be a little trickier. So today, I don't know if it's down a little bit with the futures or flattish, but above this, it has a little bit more room. I would just be a bit more careful. So, you know, in closing, there's a lot going on today. You know, the Fed day is, to be honest, not my favorite day. It's hard to trade. Sometimes you can catch some big swings, you know, on the edges of the envelope, they call it. So if they were to push the market real quickly up the spiders to 202, maybe you look to short it, you know, for a trade. If they were to push it down to 198, 197.50 in the spiders, maybe you buy it. You know, you look to see what's strong for the day to see if anything, you know, is guiding things. You know, we'll look to the banks to see whether or not if they do raise a quarter, how they respond. That could help, you know, or give you a good trade through some of those pivots that I just showed you. In the last, you know, month, in the volatility, I've talked about if you are a long-term investor and have a 529 plan or have a 401k or 403b, keep doing your monthly flows. You'll be just fine. It's actually helping your average cost. That correction periods do happen. If you trade for P&L, alpha, and cash flow, it's a different story. You know, you had to get out of the way when that 2040 broke. You had to get short, you know, into that big August 24th low. There was a lot of opportunity that day to buy in the hole, and then there was good ranges of 40 to 50 handles each day. So, you know, it's all different depending on who you are and what your process is. You know, if you could trade all 3 time frames, then you're probably a professional. If you know, have a job and you watch this and you're just trying to find key stocks, that's great. If you have a job and you just want to make some side cash flow, you know, that we have a lot of people that do that too with the VTF and with my note. Or, you know, if you're watching this and, you know, and you don't trade and you're just trying to learn, you know, you're also benefiting yourself because education is key. And with all that said, I will be in the virtual trade floor today, so you can see my positions. I will be on the radio. I will try and be on Twitter. If things are really crazy, I'm probably need a few more thumbs than I have, so you might have a little less activity from me because I do trade for a living. I just don't timestamp things and rant and rave all day long. I'm not saying who does that, but just in general. So, you know, we are a hybrid here, and that's why I think we have a very big community because, you know, we all do a lot of things, but we also try and navigate the market professionally, responsibly, with a plan. Have a great day. I'll see you at the recap.